You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. Time to review some vol. Once again, did you miss me? I was gone last week, but we had an able stand-in and none other than the best Joan Rivers in the vol game. We'll get to him in a second. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, if you're not part of the pro, you're missing out on the literal metric ton of content that's coming to you from OIC, early access to all that stuff, some exclusive stuff that nobody else is getting. Let me just put it that way. Nobody else is getting it from that show but you folks over there on the pro. Only place to get it, theoptionsinsider.com/pro. If you were there, you also got early access to the newest addition to the network. So if you like a little vol, we talked about it on a new show called the European Market Brief. Check it out. We don't add a new show to the network every day, let alone allowing us to cast our gaze a little bit farther afield, across the pond, if you will, to the world of international vol. So check that out. It was a good time. If you're subscribed to the full feed, you're already getting it. Yet another reason why you vol views hardcores, and I know you're out there, you should be listening to the full network. You're missing out on a boatload of great content. And let's see who's joining us on the old program today. Since I just talked about him, let's welcome him on. Let's congratulate him for doing yeoman's work last week as the Joan Rivers of the vol space, none other than Mr. Russell Rhoads, now holding court at the Kelley School of Business. Mr. Rhoads, congrats to you. And you had double duty. You had a newcomer on the show, and you handled it all with grace and aplomb, sir.
About 2 hours for people to see how the sausage was made a little bit. So about 2 hours before the show, I knew I was guest hosting, and Andrew and Mark Sebastian found out I was guest hosting and said, we don't want to be alone with that guy. We've heard things. So I basically, we picked up Hans, who I'm just going to tell you guys at Option Pit, he's a great pickup for your group. I was very, very, very impressed with him, and he carried the show a lot more than I did. For sure.
Not what you said to me after the show, but we'll take that off the air if you like.
Oh, you're more than welcome. I'm always very complimentary when everybody else is doing a very good job. And I'm impressed with who's joined the Option Pit team after my first impression.
Oh, there you go. You said he was a heck of a lot better than that rock lobster guy, aka Mr. Andrew Giovinazzi, who's joining us now fashionably late as always. Glad you can see he can get all of his technology working with this newfangled thing called Zoom. All the kids are all over. Mr. Rock Lobster, welcome back to the show, sir.
It's good to be back. Is my sound okay? Because I'm not hearing you as well. I'm hearing Russell well.
Yeah. You sound fine.
I had some tick issues. I didn't want to come in here all ticked up. I walked out into the woods a little for a second, and I was attacked by ticks.
Oh, I thought you meant market ticks. You meant literal ticks.
Actually, this is a crazy tick season in Maine. I'm just saying.
Somehow I survived growing up in Connecticut without getting Lyme disease. Connecticut, the
That's
mecca of Lyme. My dad got it. I somehow escaped it. So there we go. Chalk one up for me. And then also joining us last but not least, if you didn't get your fill of him on Tuesday, he's back for revenge. Yes, Mr. Matt Koren from Eurex. Mr. Matt, welcome back to Volatility Views, sir.
Thank you. Second time in a week.
I know.
This is the best way to end the week always.
You must be exhausted all this talking. You're getting a slight glimpse into my life now, sir.
Exactly.
All right, listeners, with the team assembled, let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and still is from a vol trading and trending and analysis and all sorts of fun perspectives. And it's another day where if you don't like what's going on in the market, just wait 5 minutes. We started off a little bit bearish, and I say bearish slightly. We were modestly red, which any tick of red these days kind of stands out in the sea of green we've all been living through this week. But then the bulls woke up and they realized, oh, wait a minute. We are contractually obligated to not let this thing tick red. And so we started ticking green. S&P up about 0.2%, Dow up about 0.1%, NASDAQ up about 0.1%, and VIX cash back in a 17 handle, listeners. 1765 as we kicked off the show. It puts it down nearly 5 handles, 4.8 points from where it was this time last week. Good old Volley, our old pal, Mr. Nation's Just the Facts, Ma'am edition of Vol. You're straight at the money, Vol. 14.8, down nearly 5 points as well. 4.6 points to be precise there. And good old VVIX, you might think that's crashing back to earth as well, but it's still a little juicy, still a little frothy at a 94, down 3 points from where it was this time last week. So Vol of Vol telling us maybe all is not clear just yet. Let's go around the horn. We'll start with our guest, Mr. Matt, sir. What's catching your eye in the wild domestic vol market, sir?
Complacency, I would say. It's almost like April just never happened. Markets are rallying all the way back. I mean, not to talk about European markets. I mean, DAX is back at record highs. S&P is back positive on the year. It's like April never happened. Tariff policies never happened. Life is good again. Just my opinion. I personally think that is a bit of a mistake. I think a lot of the, as we said on Tuesday, this sell-off was completely man-made. This was driven by policy. This wasn't a virus. This wasn't a war. And I think it would be a bit naive to think that just 5 months into a new administration with 3.5 months to go, you're not going to see some volatility again. So I would be a bit cautious here of chasing this rally. It seems like we could be running out of steam.
That does seem to be the way more than a few folks outside of Uncle Mike, who is perma-bullish, we all know. Outside of him, a lot of folks are starting to look at this and saying, wait a minute, we're back to pretty much unched on the year. Do I feel, if I was just starting over fresh right now, do I feel safe diving in with both feet right now? The answer for a lot of folks seems to be no, but I don't want to put words in everybody's mouth. The Rock Lobster has been weirdly optimistic on the vol front, so I'm not sure what to do with that these days. Mr. Rock Lobster, sir, are you buying this market with both hands? And more importantly, are you crushing all the vol?
Well, I have to say some of the short vols kicking in bigger here now. I did take some profits last week. And beginning of this week, because I know now that VIX direction is not the same as having your options just get crushed and go out worthless and go away. You know, you take you ride your short VIX position like your puts. You're like, woohoo, right? I'm winning. in the old days when we sold juice as market makers, the vault, it all went away and expired, right? But VIX is like, okay, 22, 20, 19, 18, 17. And if you don't take profits, sometimes the vol goes the other way. So you have to remember to close those VIX puts, or I move my stops down slowly but surely. But yeah, I think, what's weird is this all kind of came out of nowhere. Well, it didn't come out of nowhere, but Liberation Day, Trump wants some tariffs. It looks like he's going to get them. He's in Saudi Arabia on a goodwill tour. Looks a lot different from Biden's goodwill tour 4 years ago, if you recall. They're kind of rolling out the red carpet, giving him jet airplanes and stuff. So I'm going to guess those are good things. Market likes it. It's going up. And it just can't, I just like the hard thing will be if volatility can start going down again, Congress passes some and control spending, which we're still, I don't know what they're doing. I like it how all these bills go to 4 years. Like in 4 years, we'll do something, but we're not doing something today. It's like the Wimpy Burger budget. In 4 years, we'll stop spending money. But anyway, for now, the tariff thing, it sounds like they're working things out. And then all of a sudden, that's what's going to, get vol back to 16, 15. So that's what we got.
16, 15. So it sounds like you're loading up on those juicy VIX 15 puts, or putting a ton of those in your back pocket for a rainy day.
I'm looking at the June 16s because I'm going to roll some of my 17s, but I think like for a quarter, I mean, they were a quarter about 45 minutes ago. They're still around a quarter. I mean, like, 25 cents I can be.
You could twist your arm to buy a few of those. And the infamous Joan Rivers of the vol space. The last word is yours, sir. What caught your eye in a week that started off to the races and hasn't really looked back?
Yeah, look back. I've been kind of saved by the short volatility positions I have on. Versus
are you still aggressively short the S&P and everything else?
Not aggressively short. I haven't been aggressively short the S&P for a while, but I'm still short it. But that's combined with short volatility, which offsets some of the pain, not all of the pain, but definitely some of the pain. What I'm digging into right now, and I hope I'm not sandbagging Matt here, but I'm just taking a look at, now that we've settled back below 20 on VIX, I'm looking at above 20 streaks and what happens after that. One of those types of things that I like to do. But what I'm also looking at is typically VSTOXX is at a premium to VIX, and VIX have been at a premium to VSTOXX for a pretty long time, and they switched positions recently. So I want to see what happens after those streaks as well. That's everything I'm looking at.
Since you invoked VSTOXX, let's get there now. It doesn't seem proper to do it without the music. So let's get to a little bit of the old International Volatility Review. Here we go.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, welcome to International Vol Review. Our chat's all on fire about SVIX. We'll get there. We'll get there in a little bit. Don't worry. But now it's time for a little International Vol. Matt, I have budgeted you 38 minutes to talk all things vol. No, I'm just kidding. But let's get into a little bit. Russell just pointed out what we're seeing a little bit of discrepancies in the land of V stocks versus VIX. What is catching your eye, sir, in the world of V stocks?
Yeah, I would say really since Liberation Day, this is the first week where we've seen a lot of two-way activity in the V stocks options market. You're definitely seeing put buyers for sure. Now that you're back down to, 16 handle, 17 handle in V stocks. But you're also seeing guys protect themselves out through June. Some chunky June 35 call buying, some 35 call buying, call spreads out through June. So it's definitely two-way flow. We haven't seen this really in the last month. I think a lot of people, especially the institutional players, were kind of tapped out, and they were trying to figure out what you do with V stocks at 30, 35, 40. You're starting to see more of that two-way flow again. With that being said, to Russell's point, V stocks has been trading at a discount now for the last, let's say, 3-4 weeks to VIX, which is interesting. I think a lot of that is a potential resolution to the Ukraine war. That being said, that seems to keep getting pushed further and further out into the future. So, I think it's definitely an interesting tape right now. I would definitely be a buyer of some upside at these levels personally, but
and what are your thoughts? Russell was just talking about V stocks versus VIX right now. Traditionally, we've seen it trend in one direction. What are you seeing out there now in terms of that trend, sir?
Yeah, historically, to Russell's point, V stocks trades at a bit of a premium. Again, through most of April, it's been trading at a discount. It seems like most of the risk premium is in U.S. markets, which should not be surprising. Again, you got DAX and Euro stocks back at record highs. S&P is nowhere near record highs. But yeah, I think you're slowly going to see that risk premium in U.S. markets fade a bit. You'll see, you'll likely see VIX and V stocks get closer to parity. But I think Ukraine war, potential conflict in the Middle East, I think is going to be a big driver of where that spread goes in the near term.
Plus, Steve Stasic made a good point on the European market brief. Not to plug it again, but plug. You can even check out the video if you like. If you want a little glimpse behind the scenes, maybe we'll record in this vol views with some video too. Maybe we'll cut out some fun vol views so you folks can see me as I fiendishly aggregate all the data for the show. It's a very data heavy show. You're like, why is he looking away all the time? It's because we have a lot of data to aggregate for this show, listeners. But Steve made a good point on the European market brief on Monday that structurally, as we said many times, V stock should be higher than VIX. It's 50 names versus, the S&P 500. So structurally, that just should be more volatile. And yet we're not seeing that right now, which is kind of interesting. Russell, you made that point earlier. Any other thoughts you have on the relationship right now between VIX and V stocks? And are you as surprised as some others, Matt, Steve, and others, that we're not seeing V stocks maybe a little bit juicier?
I think V stocks is starting to look forward and price in the end of the war between Ukraine and Russia. I think they're, and I know saying positive things about Trump, automatically will get me kicked off the show for a month. But he's got some wins so far, and if you bet against him, it hasn't worked out particularly well. And I don't know if you guys saw the speech that he made in Saudi Arabia, where he said, we're not going to tolerate terror regardless of how long we're getting along, in front of a bunch of, he's kind of toughening up there as well. So I personally, when I've looked at how V stocks has been behaving, I feel like it's had that extra, we used to always talk about a risk premium in the price of oil relative to things could erupt in the Middle East. And I think V stocks has been pricing in a risk premium associated with a war at the doorstep of some of their companies in the Eurostoxx 50. And the flipping around now where V stocks has come down pretty dramatically, I do think some of that is geopolitical and not just reacting to what's going on in the Eurostoxx 50.
You're right. Different catalysts across the pond than there are here, which is why we launched a whole show about it, listeners. So check it out over there. And Russell's kidding. We don't kick anybody out. We don't kick Andrew off. We don't kick Russell off. You can espouse, as long as you don't go too crazy down whichever rabbit hole you're down. A few people have done that, and they have been politely asked to not come back. But other than that, as long as you keep your political diatribes to a low roar, we're okay here on the network here, listeners. What's also okay if you're short them are the VIX futures right now, listeners, coming back down to earth. The May future, as we kicked off the show, down about exactly 4 points. I think it was 4.05 to be precise. And going out to June, down almost 3 points, about 2.85 points out there. If we go across the term structure and out, we know we were remarking for a long time at how just spookily, eerily flat the term structure was. And once you get beyond August, that is pretty much the case. The rest of the year, the futures seem almost strangely locked right around 20 and a half, almost like they can't really tick away from it. They are contractually obligated to stay at or near 20 and a half. I think the highest we get is January of next year, 2073, and the lowest is about a 2010. Everything else is pretty much right locked to that 20 and a half level. So kind of a weird setup. Obviously may go in the way of the dodo pretty soon, so that accounts for that dramatic drop there. But everything else kind of lurking pretty close to flat. Mr. Rock Lobster, we'll start with you, sir. What's catching your eye in a, once again, at least beyond the front couple of months, a eerily flat term structure, sir? Once again, the big red button is your friend, Mr. Rock.
Yeah, I know. Now you're using Zoom. You know, it took me 15 years to get used to.
Let's face it, you never figured out Skype, and so my hopes for Zoom are low.
That is true. I never figured it out. So at least I'm holding to type currently. I'd hate to disappoint all the listeners that are waiting for me to mute myself. You do have a pretty flat, again, a flat curve in the back. I think mostly the flatter the curve is, to me, always means traders kind of really don't know what's going on. And hey, with Trump, you got to say, who knows what's going on? Because the script, could be changed tomorrow. Also, the tendency of us to have those kind of, a month ago, crazy down days. Today, crazy rally days, right? I don't know. I guess the Ukraine war being over would be good for everybody. And I think that would probably give things another little boost. Not a ton, but a little bit. Maybe except for some defense companies. But at this point, you got kind of the hard steepening in the front. And you're starting to, you actually have, at least for me, the way I look at it, because I always look sort of, VIX, when VIX is 12, what looks normal? Or when VIX is 14, what looks normal? Or when VIX is 16, what looks normal? And right now, VIX, if it drops into around 17 with the July at $2 over, that's pretty juicy for the futures. And I think that's part of the reason why that the back term is kind of flattish. Just because from volatility point of view, you look at, okay, 20 looked good if we were trading a month ago. But maybe for, except for a couple outlier days, realized vol has dropped quite a bit in the last 2 weeks. So I think that's reflecting that traders are leaving. I think those long-term vols are going to stay a little higher because everybody is afraid to sell them. That's, I ask my students, hey, you want to go sell that, October or September straddle for $300? They're like, oh no, I don't want it. So they're still they don't want to sell that long-term juice. But short-term, we could have that steep drop because we're rolling into summertime. Earnings are out. We just have NVIDIA, and it would be interesting to see what NVIDIA's guidance is now that some of the mojo has changed. Versus the White House and what they're exporting, right? If NVIDIA gives kind of, solid guidance or whatever, I think that would give stocks another lift, get us over 6,000, to be quite honest. So not a single company that reported said they thought everything was great going forward. Almost no one. Although many of the big ones said they weren't going to cut their AI spending. So it's sort of like they're doing that, but they're saying we can't give any guidance. So I think you follow exactly what they're doing and not so much what they're saying. And I think that's why we're rallying. But short-term volatility should be going down because realized vol is, again, I feel like it's slowly going. 10-day realized is like 10% or 18.5%. You strip out the 3% up day and realize vol is closer to like 12%. So, VIX, it's hard for VIX to stay at 20 when the market's really not moving that much. Today, we're just having that kind of meander day. So I expect everything to just steepen up again. Curve to steepen up.
Yeah, it is a wild time on the earnings vol front. If you like that, check out the episode we did a couple of weeks ago with Matt. He is the keeper of all of our earnings vol data at the end of the day. I also did a live hit with him down at OIC. That should be hitting the Pro podcast feed soon, along with some other cool exclusive stuff. Can't talk about, but it's cool. Going up on the Pro podcast feed. So check it out. If you're not on the Pro already, man, you're missing out. But we go deep into all things earnings vol. Is this the cycle where it finally comes back to earth? Our long-term average right now is somewhere around 120% going back 3 years, 12 quarters. That's a lofty level, kind of arguably not sustainable. So we'll see if that can come in. So far, the answer is yes for this season. Anyone else, Mr. Rhoads, any other thoughts on the flat term structure, sir?
Yes, I finally did the study.
I
finally actually quantified it and looked at what the market does. I've talked about this for weeks because we've had, okay, I'll tell you what I did. And it's on my Substack from last weekend, but I defined a flat term structure as everything from spot through the 7th month being within a point. And data, I started with the first day of 2011. You go farther back than that, and I just don't have a lot of confidence in the data. So you got almost 3,600 trading days. We've only had 102 instances where VIX and the 7th front VIX futures are all within a point. And 3 of those have happened in May of this year.
I was going to say, how many of those were this year?
I don't know if we've had one this week as well. What are you laughing at?
I'm just laughing because how many of those were this year is what I was saying. Yeah, quite a few.
Well, 3 of them were this week. So, 3 of them were this month. And then what I just did, and I'm still doing a bit more work on it, but probably the most startling thing I found was the average, the magnitude of the average SPX move after a day where we close with the flat term structure like that. It's up or down almost 5% versus up or down almost 3% over a 20-day period on all trading periods. So the market is, when the VIX term structure is flat, over the next month, the market is more volatile than average.
There you go, listeners. You can call it the spooky term structure study. How does that sound?
Terms?
I like it. When it gets flat, it gets a little spooky to me. I don't know. I like seeing when everything gets wild out there, if it's not just straight contango or if it's not crazy backward in the front, when everything's just kind of weirdly flat and complacent, it seems to me like there's just another shoe waiting to drop out there. Is that shoe dropping today in VIX options? Well, I guess we'll find out. The answer for today is a resounding, you can shrug your shoulders. It's not bad. We are about exactly halfway to the newly adjusted ADV out there in VIX land, listeners, which, yes, is coming in quite a bit. It is down to 741 out there right now. That puts it down about 90,000 contracts from where it was this time a week ago, which was already at a pretty low, right around 832 or so. So seeing a lot of volume come off the top. What does that mean for our proprietary TM VIX top 10 indicator? Listen, that means we're hanging out at a whopping 7-3. So we got low enough now that 1 put has rolled off the top 10. Only 3 puts to be found in our top 10. Only cost you, by the way, 155,000 contracts to break into the top 10 this week. That is not much. That probably explains why our first name in our list this week are the SEP 80s. 8 zeros. We're just kicking it off with the fun, listeners. SEP 80s, is that you? 155,000 of those bad boys out there. Number 9, 160,000 of the no 47 halves. Usually we chuckle at the 47 halves, listeners, but we start things off at the 80s, so that makes the 47 halves look, dare I say it, reasonable by comparison. Number 8, $1.61. Somebody's having fun this week. The June pars. The June 100s. 161,000 of those bad boys. Followed by number 7, hot on its heels, only 200 contracts separating them. The first of our 3 puts this week, 161,000 of the May 18 puts. So those are looking pretty good. Rock Lobster probably likes a few of those. Number 6, $1.63 of the June 16 puts. I believe the strike he said he was looking at. Number 5, $1.66 of the May 35s. Number 4, $1.70 of the July 40s. Number 3, our final put in our top 10 this week, listeners. 182,000 of the May 20 puts, also looking pretty good right now. And then number 2, we're right back to the upside, 203,000 of the AUG 42 halves. And the big dog out there this week, even though looking a lot smaller than some of our other previous top positions have, we've got 243,000 of the July 35 calls, listeners. So a wild strike range from the pars to the 80s, all the way down to the 16 puts, and just about everything in between. But now it's that time you've all been waiting for, listeners. It's time for Joan Rivers to take the mic, because it is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
Now that we're on video, Mr. Rhoads, you can see how much effort it takes to play your stupid song twice in a row. Doesn't want to do it for whatever reason.
Song's so nice, we got to play it twice. All right, Monday, I like this one. 4 a.m. Chicago time on Monday, my wake-up time, with VIX at 2015. Somebody sold 107 of the May 28th 21 calls and bought 107 of the May 28th 30 calls. They took in a 78-cent credit. Probably feeling pretty good about that trade at this point, with, you know, VIX in the almost mid-teens now. Trade to I get to cite Eddie Murphy here, because I'm going to get to show you an instance of them panicking.
So you're going to talk FCOJ?
No, but I'm going to talk about selling options and the market moves against you and you panic to get out of that short position right before expiration. On Monday, with VIX at 1896, somebody came in and sold here. This is, even if this trade had worked, we would be ripping on this trade. Somebody sold about 6,500 of the May 14th 18 puts for 13 cents. That is an opening transaction.
Well, he wanted to pick himself up a little bit of VIX to the downside.
That is an opening transaction. So, and yeah, they got 13 cents for these. And then comes Tuesday. And early Tuesday, VIX was at 1769. And somebody bought 200 of these for 42 cents. And then somebody bought 250 of these for 50 cents. I'm pretty certain they were covering their short. When they paid 50 cents, it was 40 cents by 42 cents. They paid 8 cents above the offer side. That, they're panicking. They're out there panicking.
He got the proverbial tap on the shoulder and he had to pay any price.
Yeah, well, and those two trades occurred like 5 minutes after the market opened. And then later in the afternoon, when VIX was like in the 1795 range, they bought 150 more at 26 cents and 100 more at 23 cents. So it looks like they got out of all of about 5,000. The settlement was actually 1808. So the rest of them settled out of the money. But that's a hell of a way. And I should probably go back and figure out what the loss was on this 1,500 and what the gain was on the 5,000 and see if they net made money on this. But if they made money, they sure as heck earned it, is all I've got to say with the stress behind that one.
They had to sweat for it.
Yeah, you can just see the market open, and I can just see like a manager walking over and go, cover those things. And then when you get filled 8 cents above the offer, maybe you get out of the way for a little while. Also on Tuesday, and you guys agree, we would just rip on that trade, even if it, even though, yeah, it's not a good.
Not my favorite. Yes.
No, it's one I probably should go through. I keep all of these. I keep the document on all these. I ought to go through and like my 5 worst weeklies trades each year, because it would. I could easily come up with probably 20 or 25 of them. Also with VIX at 1797 on Tuesday, somebody looking for some volatility between now and June 11th. They bought the 19 call, and they paid $1.41 for this. And this would possibly go on the list of worst trades as well, because the market was 96 cents by $1.41. Come on, people. Try to split the difference there a little bit.
It's already a bad market to begin with.
Yeah, I mean, it's a freaking wide market, but come on. And then this trade, I'm not. I do know what's going on with it, but somebody, and this is a trade that seems to be being added to, even maybe today, not today, but maybe yesterday, with VIX at 1775. Somebody sold 200 of the May 28th 25 puts for 695. So you got a break even of 1805 there on those. They're just looking for VIX to move up, and the way they're expressing that is by selling a deep in the money put. I don't think I've ever seen anybody do that way, but I guess it makes sense for them. It did look like, just from volume, but not blocks, that it may have been added to a bit yesterday at a higher price. And it looks like it's an add-on of a trade from about a week ago where they sold the same options for about 350 when VIX was up in the 20s. So they're fighting it here. They're adding to a losing position, but VIX reverts to a mean from the downside and from the upside. So maybe we'll get some upside reversion for them between now and June 11th. And I wouldn't be the least bit surprised if we get some sort of move up in VIX if they try to monetize this one. Typically, when you struggle to get into your position and when it's moving against you, you're so thrilled when you can maybe break even on part of it. You'll try to get out of it. Wednesday, another opening and bullish transaction. Somebody bought 402 lots of the June 3rd 17 calls for 259. This was when VIX was like in the 1819 to 1842 range. It's a pretty wide range on VIX. Break even. They're looking for VIX to get back up into the 20s at some point between now and June 3rd. And then finally yesterday, just because because the days of talking about really high strikes are probably going to be behind us pretty soon. VIX at 1870, somebody bought 1,500 of the June 3rd 50 calls, and they paid 14 cents for those. So somebody thinks maybe they've got a hotline to the Kremlin, and they found out that Putin's going to escalate right when everybody thinks it's almost over. Who knows what they're thinking with that one. And that was an opening transaction as well. There are only 2 weekly trades on the tape today. So things everyone's spent after all that madness on Monday. They got nothing left. Yeah, I think that has definitely something to do with that. But also next week is standard, and standard expiration week. It's harder for me to come up with weekly trades. All right, let's keep rolling. Let's see what's lighting up the tape out here this week. A couple of pockets of activity out here this week, but you might be surprised, listeners. Today, like we said, not exactly lighting the world on fire. 406,000 contracts on the tape. The big dogs, such as it is 20,000 of the AUG 40s, followed by number 2, right back to the fun, 17,600 of the June 70s. These one just brought a smile to my face. I had to look. What are the June 70s trading for? They're trading for 11 cents, about 18,000 times. Now, it's probably a closing transaction. But that said, we had to ask you folks. You folks are the ultimate arbiters at the end of the day. June 70s, trading for size for 11 cents. At that price, are you a buyer? Are you a straight naked seller? Is that just crush them? Are you going to sell them as part of a vertical? So maybe you're going to buy something else, maybe the 30s, the 40s, the 50s against it, or you're just not touching them with a 10-foot pole. And right now, that is what's winning with our flash poll here. 45.5% saying you're just not touching those with a 10-foot pole. I'm kind of with you. Not a fan of selling them for 11 cents, certainly, but buying them. I don't know if they qualify. I don't know if they're junky enough for Matt. I think he likes like a 2 delta. 36.4% want to buy these bad boys, so there you go. And then 9.1% each to sell them naked and sell them as part of a vertical. So good stuff out there. That'll be running for the rest of the day, so you folks on the podcast can play along as well. And then number 3, 14,000 of the SEP 45. So we are all over the place today, listeners. Number 4, about 13,000 of the June 40s. And number 5, 12,000 of the June 25s. Yesterday, a pretty hot day, 995 on the tape, so threatening a million. Didn't quite get there.
Spoiler alert, we got there 2 days this week. Bet you can probably guess which ones they are. But 995 on the tape for Thursday. The big dog yesterday, 107,000 of the AUG 25s, followed by number 2, 80,000 of the NOV 47 halves. Excuse me, number 3, 80,000 as well of the AUG 42 halves. Those were closing, we know that. 42 half strike's been popular for a while. Number 4, 40,000 of the AUG 45s. And number 5, 32,000 of the AUG 20s. Wednesday, 823 on the tape. The big dog, 80,000. Once again, AUG 42 halves also closing. So folks bailing on that strike these days. Also 80,000 for number 2 of the NOV 47 halves. Those were opening, so we could have had a bit of a roll from the AUG 42 halves to the NOV 47 halves. Both those strikes pretty popular. Number 3, 41,000 of the May 20s. Number 4, 40,000 of the May 17 puts. And rounding out the top 5, 23,000 of the June 16 puts, the Rock Lobster's favorite. Tuesday, one of our M handles, 1.22 million on the tape. Listeners, 52,000 of the May 17 puts. That was your Huckleberry for number 1. Number 2, 38,000 of the June 50s. So if you thought it was all puts all the time, you would be mistaken. Number 3, 35,000 of the June 17 puts. Just a lot of puts. Number 4, 32,000 of the May 18 puts. And number 5, 31,000 of the June 21 calls. So more calls slipping in there than you might assume. And then Monday, of course, the banger day of the week. It was already north of 1 million by the time we fired up the microphones on the option block on Monday, listeners. So you know it was going to be a hot day. It ended up at 1.75 million. Maybe not quite as hot as you might have assumed. Maybe you would have assumed 2 million contracts on the tape. Not quite there, but pretty darn close. The big dog, 104,000. And you know it's puts. In this case, it's the May 18 puts. Number 2, 79,000 of the May 17 puts. Number 3, 72,000 as well of the May 21 puts. Number 4, 70,000 of the May 20 puts. Just a put palooza. And number 5, 55,000 of the May 19 puts. I'm curious, Matt, I know you're busy most days watching your flow out there in V stocks, but it was quite the hurricane of paper, especially early on in the week in VIX options. Anything come across your desk and make you stroke your chin and say, or did you maybe see any related paper going up in V stocks? And you said, oh, that's what that's against, sir.
Yeah, I mean, I didn't necessarily see anything VIX versus V stocks, but again, it seems like it's a mix of, 1, people kind of protecting their downside at this point, and 2, people unwinding some of these chunky trades that they may have put on earlier in April. Again, flows seem very mixed. It seems like people are kind of protecting some of the gains that they may have right now. If you look at Europe, I mean, you look at something like Stock 600, a lot of the put activity that you see out there is people protecting downside. Again, you got DAX up 20% right now. A lot of the institutional flow that we're seeing by far is protecting downside. Not a lot of call chasing, at least from what we're seeing. If I were a betting man, which I am, I think we start to see vol tick up a little bit from here. It just seems like the market is a little too complacent given the potential headwinds that we could see later this month and when that 90-day pause on tariffs comes due.
Are you implying that the June 70 calls for 11 cents are junky, sir? How dare you? How dare you cast such aspersions of such quality paper out there? Mr. Rock Lobster, come to the defense of those June 70s. Why did you buy so many? And then what else was catching your eye out there this week, sir?
Well, you know, as Matt says, you don't need it to go to 70 to make some money on them. You just need them to go from 11 to 40 cents. You know, I did see that upside paper. I was a little wowed, and then there was also a little bit of put paper. Actually, people are now interested in zone 2 puts. You know, puts from like 17 to 14 again, like right around that area. So. A lot of times vol goes to the place where people don't believe it's going to go. So I think in February, nobody really saw 50 or 60 vol and south of 5,000 SPX. And I think as we go into the summer here at the beginning, I don't think folks are going to see a lower vol. So I saw a little bit of put paper, but you know, I think the setup now is you buy those junk calls and you just buy a crap ton of VIX puts in the short term, and I think that trade will probably work out. But what do I know?
By the way, I just realized I probably should clarify myself. When I was talking about junk calls with Matt earlier, it wasn't this Matt, it was Matt Amberson from Orats, who loves himself. He loves himself some garbage calls in VIX. So Matt, I would never demean you by saying you love garbage calls in VIX. That's only for the exclusive domain of Mr. Option Rats. Let's get out now to the ever controversial, some might say exciting, unless you're hanging out in V yield, then it's a snooze fest. But let's go out to the world of inverse vol. SVIX finally catching a bid, although not enough for our chat. They started off the show saying, what's up with SVIX? Is it broken? It should be at a 20 handle by now. I think some of that is just, I think they're speaking their position a little bit. They got a little bit of SVIX in their back pocket and they want it to roar to life. I get it. I feel some of that, but SVIX, we got to take what we can get. 2 points, nothing to sneeze at. 15.2 as we're coming into the start of this segment, up about exactly 2 points from where it was last week. Only 6,500 contracts on the tape, and the ADV starting to go back in the wrong direction, back down to 18,000 a day. That's down 11,000 from this time last week. So you think SVIX finally moving again would get people to trade the options, but apparently that's not the case. And I just checked. If you're curious what's going up today, you know the answer. With SVIX hanging out around a 15, you know it's a bunch of 15 puts and calls, and that's the case. 15 calls going up 2,000 times today. That's the big dog out there. People love to just roll the bones on expiration day in this product. They're addicted to it. Mr. Rhoads, sir, what's catching your eye out there in SVIX, and what are you up to these days? I know you got some in your back pocket. Are you overwriting? Are you picking up more? What are you up to?
I got out of the way. Kept getting called away from me, so I'm pretty glad that I got out of the way. And it's so I just looked. I've talked about in the past about how the way the skew is with these ETPs. Sometimes you can do that buy 2 calls, sell 1 call against your position, and not increase your downside, but double your upside to a certain point. And I was just looking at that, and the liquidity is so freaking bad in those options. I just can't even come up with something cute to do there. I do want to, and I didn't answer the question during last week's show when I was at the helm and in full charge. But somebody did have the question. I don't understand the point behind V yield. VYLD.
Oh, yes, that is a listener. By the way, fun, hard. You're starting to realize challenging to answer questions and host a show at the same time.
Oh, it's challenging. Hell, man, I can't even chew gum and type. Don't even start. I busted my shoulder running cross country. I'm so uncoordinated, it's ridiculous. But I did want to defend my baby V yield. It was the top performing VIX ETP last week. It was up 1.38% versus 0.99% for SVIX. I have a funny feeling some of that has to do with illiquidity.
I was going to say, what the hell happened there?
Yeah, it's because right now it's up. It's up less than a point. While as you mentioned, SVIX is up a couple of points, but also V yield is up a point at 24.55. SVIX is up 2 points at 15.15. So in a percent, I was trying to do the math very quickly and ran out of time before you threw it to me. But whatever happened to make V yield the winner last week, and I think it'll be the only time it's ever the winner of all of the VIX ETPs performance. I think that was more of a disconnect from what the fair value is or something along those lines. I hate to say this because beyond seeing headlines, I don't know anything about it. Are you guys aware that they filed that 4 or 5 new ETPs just got filed in the VIX space?
No, hit us with them.
I don't remember them. That's why I'm asking you. But I do know I did see a couple of headlines, but like you, I've been on the road this week, or I was on the road this week and haven't had a chance to dig into that. I was going to dig into it and write about it this weekend. But there are a handful of short volatility ETPs. They have been, and my buddy Jim Carroll that we're going to do, that he and I are going to do a battle royale. He was actually the one that brought it up within my little chat group.
I just tried searching for VIX ETPs right now while we're talking, and the first thing that came up was our episode of Volviews from last week. So that's not helping me at all. Nice to see we have such good Google foo, but not helping me right now, Google. But Mr. Rock Lobster, are you aware of these new vol ETPs? And what are your thoughts about what's going on in the inverse vol space? And do you have an answer to the question, what the hell is the point of V yield?
Oh,
You know, the problem with the vol ETFs is it takes me like 3 months to figure out what they do, the new ones. Like I just get used to one. Okay, so VX, so this is the classic. Again, we sat here, VXX was a freaking rain bringer, cash register ringer, greatest product ever, and they screwed us, right? Because they let the net asset value get all ballooned, and it became a crap show. And then they changed the index underlyings on some of these, so they went from like 2 to 1.5, like SVXY they cut in half. So, all right, I'm just getting off my soapbox there. The point is, it takes a while to figure out how these products perform when you actually see them move. So they could say all this stuff. So I would just say to the listeners, observation is the best, remedy. VIX does this, futures do this. What are they doing? So the short answer is, I don't know what they're listing. I don't wait till they survive for at least 6 months before I care. And then I might get interested, and then hopefully Russell writes something and I just start to look at what he writes. So that makes life a lot easier, to be quite honest. I let Dr. VIX do all the heavy lifting now. I've gotten smart in my old age, to be quite honest.
Mr. Rhoads, were you raising your hand like you're in a classroom? Is that what you're doing?
You know that there's 3 funds coming out from Defiance. One is called a vol carry hedged ETF. So it is what it is. And then a short vol ETF and a long vol ETF. And then a firm called Roundhill is coming up with a long VIX futures points ETF. And that word points, that's what makes V yield different. It's based on points and not a percentage change. So now we're going to have a dull booty. I started saying, we're going to have a dull ass long VIX ETF now too.
Super sexy. Matt, are there any vol ETPs that you pay particular attention to over there?
I mean, one thing I just noticed is the expense ratio on SVIX is almost 4%. That is expensive.
They got to pay for those juicy VIX calls somehow.
I guess
That's
so.
to pay for the kickback to me for talking about it all.
Well, if you're getting a kickback, what the hell am I getting? I need to reach out to those folks.
But I mean, to Russell's point, yeah, I mean, there definitely have been a bunch of new introductions in the space recently. I saw a bunch of redemptions as well. BMO has some of their triple levered funds that I think they just redeemed as well. It's obviously a great time given some of the volatility to reduce some exposure, especially in the ETN space where it's effectively pure credit risk. So not surprising that you're seeing more launches now that the market's rallying back, but definitely seeing some redemptions as well.
Let's run through the rest of the vol ETP space and we'll get to the crystal ball. UVIX was at a 2740 earlier in the show. It's down about 11 points exactly from where it was this time last week. Another one kind of struggling on the volume side. 15,000 a day is only its ADV, only about 9 to 10,000 on the tape right now. UVXY 21.25 down about 5 3/4 points. 24,000 contracts on the tape. That's pretty light, especially when you see the ADV is 79,000 a day, and that's down about 21,000 from this time last week. And let's not forget VXX 51.5 down 8 1/4. 15,000 contracts on the tape today. The ADV is 42,000. Another one coming down hard, down 14,000. You think this week these ETPs falling out of bed would drive some options flow, yet that's not the case. But now it's time, listeners, to dive right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt valiantly, some might say foolishly, to predict what the vol gods hold in store for us for the coming week. Last week on the show, I was away and the mice did play. It was Russell at 22.26 and Hans Albrecht at a 20.58. And spoiler alert, we're not there, listeners. 17.46 coming into the end of the show. So nobody had the vol annihilation of about 5 points plus in their back pocket this week, which, by the way, we are still pretty much right there right now as we're kicking off, or I should say ending the show. Most of the major indices pretty much exactly where they were, and VIX Cash right around, like I said, 17.46, 17.5 right now. So spoiler alert, no winners. That means let's go with Matt, 'cause you don't get a chance to come on that often. Mr. Matt, sir, what are you feeling for this time next week? You can do VIX, V-Stocks, or both.
I'm going to do both. I'm going to say VIX is going to be exactly and next week exactly where it is now, roughly around 1740. I'm going to say VSTOXX is going to be a bit higher. Let's say in line with VIX, 1740 as well.
Interesting. A double prediction of 1740 for this time next week. Listeners, interesting stuff. And you know, I wasn't on last week, so I'll go next just for fun. I'm not feeling, let's see, 17, roughly half in VIX cash. You know, I might lean towards a little bit more spice, a little bit more fun. Let's go 1926 for this time next week. Mr. Rock Lobster, you get to go next there. What are you feeling?
You're muted.
Yep, again. I can't now. I hate this mute button. I can't see it in Zoom. No, what I was saying is this show is sponsored by Eurex, and the Pilgrims came from Europe. So when did they get here? 1607? Is that it? 1607 or 1602?
Like
I think it was a little later than that, I think, but yeah.
1620? 1620. That's what I'm going with.
All right.
1620.
Should probably put it in the right person's name, 1620. And then Mr. Rock Lobster, if folks want more Rock Lobster goodness, where should they go?
Oh, yeah, I got to hop. Code optionpit.com. Earn while you learn. My products get my students, they make money, and they learn at the same time. Oh, my God. And I put all the trades on myself, so they better work. That's all I got to say.
His wife will get really mad at him, listeners.
And every once in a while, I steal one of Russell's ideas, and I use it as my own. But I tell people, I go, hey, this was Russell's idea. So if it works, it's mine. But if it doesn't work, it's Russell's.
There you go. Check him out, optionpit.com. And last but not least, Mr. Dr. Vic, sir, what are you feeling for this time next week?
Nobody had an 18 handle, did they?
No, the closest was Matt at a 1740.
That's why I just want to make sure I didn't step on any toes. Well, Chicago was incorporated as a city in 1837. So since we're playing history,
I know we're doing all historical numbers this week.
I'm doing historical. I'm going with 1837.
18. And you know what? Since I won't leave Matt twisting out there by himself with VSTOXX. I will play the VSTOXX game as well because it's fun. If you want to as well, Russell, you can. It gives us two chances to win, right? Matt's going for a parity. I might go, since I'm saying 19, almost 19 and a quarter in VIX, I might go a little bit frothier in VSTOXX. I might say a 20.01, about a 3/4 point premium. So there we go, listeners. Things getting spicy, getting juicy. Now, Mr. Rhoads, you want to throw out a VSTOXX or?
Do a 1776. I think the war is going to come to an end next week.
Wow. First off, another historical number. And then secondly, wow, just crushing that premium all the way. Wow. All right, Mr. Matt, thank you for joining us. You did an able job. 2 shows this week doing yeoman's work. If folks want to learn more about all things VSTOXX or Eurex, where should they go? What should they do?
Easy, Eurex.com, or message me directly, Matthew.Koren@Eurex.com, or reach out to Mark.
Yeah, and you can also get more Matt and learn how to contact them and learn more about what they have to offer outside of Vol. Check out the European market brief, hot off the presses out there. We get emails and notifications all the time, Matt, and it was kind of funny. That show went live, Tuesday? And people are hitting us up for their services all the time in the podcast space. As you might imagine, we have a lot of shows floating around out there. And someone reached out to us the next day and said, you know, this new show you just launched, #1 on Apple for European markets. Well, that's good.
There you go.
We're crushing it. 1 day in. That shows how fast the people are on the uptake now. We launched this new show, not even 12 hours in, and they're already hitting us up to work on it. So there you go, listeners. Check out the #1 new show on Apple Podcasts for European markets, the European Market Brief. Pretty far up there on options, too. I guess that goes to show the strength of the network. Growing strong. Every new show we launch faster than the last, which is always good to see. And Mr. Rhoads, last but not least, if folks want to check out your study on the VIX futures and maybe debate your secret weekend UVIX trade really quickly, are you up to it again this week? Any changes?
Yeah. I'm going to continue to do that one. Anything that I do quantitatively, I try to. If I don't do it, it's because I forgot to execute the trade. It's not because of any kind of discretion or anything like that. But I have a sticky note right here that says execute. And if it's a sticky note, it gets done. Everybody in my family has learned that one. I put everything up on my Substack. I'm getting ready to really get active because school's out. And I can totally focus on a lot of this market stuff. And I've got a lot of things that I want to work on. So, yeah, just follow me on Twitter, which you guys retweet me all the time. And I would encourage you to, I get a really good piece that helps me when I'm looking at the VSTOXX. I get that weekly from Matt. In fact, I get it mid-afternoon on Fridays, which is very helpful. So I can write my stuff up on Friday nights. But like you said, Mark, I would encourage people to reach out to Matt and get and at least get on that distribution list.
Yes, that is a handy one. I do use that myself, listeners, to keep in touch with all things V-Stocks. Matt, really quickly, if they want to get that, where should they go?
Just email me directly. There's also a Substack. It's European Volatility Substack, it's called.
All the cool kids are on Substack these days. I have to get on it. You're on it. Eurex is on it. Passarelli's on it. Vixologist is on it. I got to get on V-Stocks, I guess. Listen, or excuse me. I have to get on Substack out there as well. So check it out. A lot of good vol reading on Substack. That's going to do it for us on Vol Views this week. If you are joining us on the podcast side, that will conclude our broadcast week with you. If you're hanging out in the live, stay tuned. Special gift. I'll be coming back post-haste right immediately in your ear holes with a whole bunch of fun options, oddities. We'll get weird. We'll get wild. It'll be a good time. Looking forward to it. So stay tuned for that. If you're not on the pro yet, what are you waiting for? The optionsinsider.com/pro. Some juicy exclusives hanging out there right now is all I'm going to say. It's all I'm legally allowed to say at this point, listener. But check it out for yourselves, theoptionsinsider.com/pro. Then we're back again on Monday with the option block. Can the Rock Lobster dig himself out of his 80s trivia hole? Doesn't seem like it, but we'll find out on Monday all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.